If you really like a company and if you feel that, oh, it's growing very well, just put a small amount of your capital and keep watching. If you build further conviction, it's okay to put more money even at a higher price. Sometimes your returns are front loaded and then the stock may not do much. Sometimes the other way. So the key is that do you have enough conviction in the opening performance of the company? And here that's a resounding yes, right? Right. So you look for companies where there's potential to grow, and there's ability to create that growth by the management team. It's no guarantee that it will happen, but you try to put yourself in places where odds are in your favor.
Hey guys, I'm Sonia Shenoy and I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet impactful news and views along with the best and brightest minds in the financial world. Hello and welcome to the Money Mindset. My guest on the show today is an ace stock picker, someone who has been in the market for decades now and is known for picking multi-baggers in the small and mid-cap space. I have with me Sumeet Nagar of Malabar Investments. Sumeet, thank you so much for being with me on the show.
Thank you. It's my pleasure.
It's really an honor to have you here because we have seen the kind of portfolio stocks that you have built for yourself, for your clients, for your global institutional investors, and you have this knack of picking multi-baggers, picking small companies and watching them grow. And through this episode, I want you to sort of, tell us what your investment philosophy is. But let's start from the beginning. How did you get into the markets and what motivated you to sort of choose this as your journey?
Sure. So my journey is perhaps a little bit unusual compared to many other market investors. So I aspired to become an engineer when I was young, and that was my passion. My father was an engineer. At a very early age, I decided this is what I want to pursue, and I was lucky enough to get an opportunity to do that. So I studied engineering, and actually I started working as an engineer after I graduated, and for several years I did that. And it was in that journey that I somehow got interested into investing. One of my mentor was an investor, and I also started learning about investing from him. Started to read some more, started to apply that. In the beginning, I felt that, oh my God, like this is so good, I can do so well. But then as time passed, I realized that there is so much that I don't know. But I also came to the realization that this is something that I quite like. It's investing in some ways is something that engineers can get because you have an equation, right? You have a company that's worth an X amount, and you pay Y price for that, and the difference between them is your margin of safety. And so you understand that. It's also, I think, the more importantly, it's that um, any company doesn't sit in a vacuum, right? It's part of a larger ecosystem. So it's almost like a cog in a big machine. And if you understand how that works and what is the importance of that cog to the entire machinery, you have the ability to unlock or create that value. So, long story short, I think that's basically led me to believe that this is what I want to pursue, and also knowing that I don't know enough led me to business school. So I went to study investing and finance, and
Where was this?
I went to the Wharton School
Okay.
in the U.S. and I learned quite a bit about investing from there. But during that period, I realized that you also need to learn about businesses, right? So if you want to be a successful investor, you need to really understand what does it take for a business to be successful. And and I was lucky enough to have an opportunity to join the McKinsey and Company after business school. A lot of my work was focused around investing, so I advised clients on making investments. I did that initially in the US and Europe, but fairly early on, I started to look at investments in India. Um, and as I did that, very often I found that some of the best ideas were these small and mid-sized companies that were growing very well, compounding well, had good balance sheet, good cash flows, and yet in many cases they traded at a discount to what they should have been trading at. And so I think that realization sort of brought me to this conclusion that, hey, you have this segment of the market where there are a lot of fish, but not many fishermen, and that's where you should be, right? If you want to find these outsized returns,
True.
and so that was the genesis for starting Malabar, and moving over from engineering to investing.
Interesting. So you've invested all over the world. But just for the uninformed, Malabar Investments now manages over 10,000 crores in terms of capital. And the publicly disclosed companies that they have, I think there's a portfolio of 18 to 20 stocks that has, a net worth of around 5,000 crores or so, which includes many multi-baggers that you've identified, whether it is Safari Industries, whether it's Affle India, whether it is Genesis. I was looking at your portfolio. That's one of the stocks. There's Newland Labs as well. So I'm itching to know the philosophy behind, all of these names, and we'll get into them one by one. But before that, you said you had many mentors when you were growing up, right, in the market. And to this day, you have this whole ecosystem of people who, kind of you bounce ideas off. Who has been the one mentor that has given you the best guidance? And what was that big piece of advice that you got which helped you get through this journey?
Yeah. No, so I've been, as I said, I think I've been lucky enough to have many mentors, through the years, and you always pick up something that you learn from them that you apply, and once you've done that, you get sort of another piece of advice that's very, very useful. So I think that's very important. I think for the young members in the audience, I think to find these people around you who have more experience, who know more, and to seek them out for input, for advice. And so in my case, as I said, I think I had many mentors along the way. I think if I were to think about the pieces of advice that were most useful, I think one of these pieces was that when you're analyzing an investment, you have to look at the underlying business. And we're looking at the underlying business, you have to look at what are the drivers of value creation in there, right? And for each business, they're going to be different. So you can't have a set formula, right? But you need to be able to understand of the hundreds of things that affect the business, which ones are the most important, and then try to dig down deeper into them. And there were always a few where there's most amount of uncertainty. And if you can understand those better than others, you have a chance to have a differentiated view, right? So again, it's a very old school way of looking at investments and analyzing companies, but I found that to be extremely useful.
Okay, that's interesting. So all of these multi-baggers that you found, right? Whether it is Safari Industries, whether it's Newland Labs, whether it is Affle India, these are companies that you've bought at a very nascent stage and you've seen them grow. What are the 5 or 6 things that are, green flags in a company when you're looking to acquire them or buy into them?
Sure. At a high level, we think about sort of, three broad things, right? So number one, the business needs to be very attractive in terms of its economics and growth, right? Number two, the management team needs to have the capability to realize that potential. And number three, you need to buy this combination at a reasonable valuation relative to what they're worth, right? So those are the three broad things. But when you drill down into each one of them, there are many other factors, right? So when you're thinking about the business, it needs to have a large addressable market, right? Moreover, you need to have sort of adjacent areas that are big enough where companies can over time expand, right? So I think this runway for growth is an extremely important point. Equally important is the economics of the business, right? So if you there's a huge difference between a company that's able to grow a lot but requires a lot of capital versus a company that can achieve that without needing much capital. Over long term, it makes a huge difference. And the thing is that nobody allows you to be able to grow like that without investing much capital. So for that to happen, you need to have something truly differentiated about what you do, right? So you need to have something that others cannot copy, right? Because otherwise people, why would you have a free lunch? So if you find a company that has this long runway for growth and that is differentiated enough that other people cannot copy, and that reason for differentiation can change. It will differ massively from sector to sector, from company to company, right? So Sometimes it could be technology, sometimes it could be know-how, sometimes it could be brand, it could be distribution, it could be even execution, but there has to be something unique, something differentiated about the company that others cannot easily emulate.
Mm.
And if you have that, you can generate returns on equity and capital that are way above your cost of capital, which means that you don't need much capital to grow. So if you find that combination, then that's a very important part of that formula. That here's a company that has a long way to grow. It won't consume much capital, so the investors don't have to get diluted, don't need to borrow too much, and you can actually benefit from the growth that the company is delivering, right? But then equally important is the management, right? So management, their capability, their capital allocation, their integrity, governance, the next level of management team beyond the top management, all of these things become
Play a very
extremely
big
important,
role. Okay.
right?
So, did you guys know that 7 out of 10 Indians do not buy term insurance? Now, in case you don't know what a term plan is, it is a lump sum that is given to your family, say about a crore or so, if and when you pass away. Now, this will help them with their monthly expenses, requirements, loan EMIs, etc. And it's very cheap for young individuals. In 10 to 20,000 per year is the kind of premium that you would pay, and it takes a very brave individual to plan for contingencies like this. And if you do follow me, this is a gentle reminder for you to look into term insurance. I trust the folks over at Ditto Insurance because they will give you tailor made advice on the kind of insurance that you need for your family's needs. And all of this is spam free. There's no forcing to buy, there is no mis-selling of insurance. So it is a great way to actually insure your family without all the hassle of people spamming you all the time. Not just that, they support you with your claim settlement and they give you biased free advice. So I highly recommend you click on this link where you get access to one of Ditto Insurance's highest rated advisors. They only have 50 slots left, so book your appointment now. So if you're talking about a company where it's tough to enter, so there are a lot of entry barriers, right? What about, let's take an example of, say, Safari Industries.
Mm-hmm.
You've had a huge run in that stock. I mean, it's been a multi-bagger for you. But now we're at a time when, and it's, one of the largest luggage manufacturers. There's a booming tourism economy that's growing in India as well. But now we've reached a stage where there's a lot of competition as well. There are newer players, Indian players coming out, global players are picking up in a big way. What do you do at such a point in time? I mean, do you sort of exit when there is high competitive intensity, or do you continue to ride it if it's a market leader in its space?
Sure. So one of the things that I found over the years that every management thing there's a lot of competitive intensity in their sector, right? So I've heard that from even companies where there are only 2, 3, or 4 players in the industry, and then obviously there are industries where there are 20, 30, 40 players, right? So the competitive intensity is a part of life. It's always going to be there. I think the question is, do you have something that keeps you ahead of competition? And as long as you have that, you will have the ability to keep generating that extraordinary returns, and that can power your growth. So in case of Safari, I mean, not many people realize, but it's been the fastest growing listed consumer company in India over the past decade. And of course, the tailwinds are very helpful, right? The fact that India is traveling a lot more, right, both domestically and internationally. There are many people who are traveling by air for the first time, and when you travel by air, you need to have a lighter, sort of more suitable luggage, and so they're buying luggage. They're buying luggages for different occasions, right? So that has started to change. Different family members want to have different pieces of luggage, right? So there are a lot of these changes that are coming, right? And this is, we're talking about travel. There's also personal, luggage. So you have backpacks that, different bags that people want to travel with. So I think that consumerism is increasing over time. I remember when I was a kid, we used to have a piece of luggage. I think it stayed at home for I don't know how many decades, right? Now people change them every 3, 4, 5 years, right? So that industry tailwind, of course, is very useful, right? And in some ways will continue to remain. I think India will be the fastest growing aviation market in the world for the next 2 decades, right? So that tailwind remains. But But I think what Safari was able to do was that through its execution, through its capability, they realized that there's so many people who are traveling for the first time. They want to buy something that's better, but they also don't want it to hurt their pocket, right? And so they figured out how to provide this a quality product at a very reasonable price,
And in a price sensitive market like India.
and that worked extremely well, right? And so in that sort of uh, affordable branded luggage segment, they are the kings. Nobody can compete with them. And any number of new brands that are coming, uh, there is no way they can compete with Safari in that space, right? So I think that's an advantage that they have that others won't be able to copy. But there's also the premium end of the market where these newer brands are actually doing quite well. But that's an opportunity that's available to Safari as well. And I would say that over the next 5 or 10 years, you will see them doing quite well in that segment as well. And this is just India. I mean, there's also the potential to export, which they haven't scratched the surface because until now it's been a challenge just to supply to the domestic market, right? So again, these are the long-term trends that are behind. That's what is allowing the business to continue to compound, and that compounding story doesn't change that quickly, right? So there's a lot of momentum and will continue. Yes, from time to time you may have a year or two where things are slow. They of course they went through the pandemic, which was a disaster for travel related companies, but you come out of that stronger, right? And that's what they've done.
So you don't think the story has reached its mature phase yet? Because the growth in Safari, the stock has been phenomenal, right? So if someone is looking out for the next 5 to 10 years, you think there's still a lot more scope in this space?
So again, purely from a business point of view, leave aside the stock for a moment, right? From a business point of view, there is a lot of room to grow, right? I mean, if you look across the country, 90% of people haven't traveled by flight yet, right? And they will. I mean, that number will change, right? More and more people will travel. Today, it's supply constraint. There are not enough planes to fly people. The desire is there. People willingness to pay is also there, but there are not enough planes. But over time, those constraints will ease. People will travel more, and when they will travel, they will buy luggage, and Safari will be a beneficiary of that.
And not just planes, right? I mean, even if you look at trains with IRCTC coming through, then you have these events, right? Religious tourism is a huge thing right now. As we speak, there is Mahakumbh going on where there are like 40 crore people sitting there and traveling from different parts of the country, different parts of the world. So fair enough. Okay. So that is on Safari. And of course, you have been, sort of slowly increasing your stake in that company as well. But let's get to some other themes. I was listening to your conversation that you had recently on Newland Labs and the kind of opportunity that this entire space has, right? Pharmaceuticals, not just API, CDMO companies. It's been huge, the run up that this entire space has seen. But what is the future? Because these are stocks that are also on a valuation basis looking quite expensive at the moment. And you're someone who has bought into, I think you bought into Newland Labs way back.
It's about 9 years now.
9 years ago.
Yeah.
So you've held on to it through this 9-year course and increased your stake in the company.
Yeah. So we in the first few years we sort of increased our stake. We bought so some secondary opportunity. They used to have a holding company that was owned by a private equity firm. So we bought their stake. Then the two merged, and that's how we ended up building a sizable stake in Newland. And then in 2018, they had an opportunity to acquire a very large facility at a very, very attractive price. But they needed capital for that. So we infused capital for them to acquire that facility. And in that process, we reached sort of the maximum that we could own was 9.95%. And so we held that for many years. In the past year, we had to reduce that stake just because it had become a very large position in our portfolio. But in terms of the potential for the business and the industry as a whole, it's huge, right? Because yes, these companies have done very well, but they're still minuscule compared to the large European or the Chinese players who are in this space. And if you think about healthcare and spending on that will continue to increase, right? I mean, the world's population continues to age, you need to have more and better drugs that the population needs. and so that innovation will continue. And cost of doing this in Western countries is probably prohibitive today, right? So they will look at outside partners. India has proven itself to be a very capable partner, and so I think the story has very long legs. I think it will run for many years, and Newland has been a big beneficiary of that. And again, it has a long runway to grow.
I remember you saying that, it takes very long for the US companies to kind of have that trust in companies in India to be a service provider, and now, or rather to be a product provider, right? And now that has happened with Newland. Do you think it's reached its mature phase, or do you think there's a lot more to go?
No, I think there's a lot more to grow. I think they Newland specialized by in serving the emerging biotech companies, right? Because they realize these people are the ones who are driving the innovation, and they usually don't have manufacturing experience, and so they can bring that manufacturing experience to them, and they can partner in that journey. And obviously, not every molecule will succeed, but if you have a portfolio of them, if you have 100 of them, you know that some will succeed, right? And so I think that's the process that continues to play out. But this is still just with the emerging biotechs, and even there's so many other companies they could work with. But in addition, what's been happening is that many of these biotech molecules are getting acquired by large pharma companies, right? And Newland historically hadn't worked with that, but now some of their customers have been acquired by large pharma, and as they get exposed to Newland and their capabilities, there's a lot more opportunity for them to get business from them, right? And again, I think so far bulk of their focus has been on what we know as small molecules, but they also built very good capabilities in peptide. And very recently, I think they've announced that they're expanding and setting up a manufacturing facility for peptides. So that again, that will open up another
That's a fresh
avenue for
trigger,
growth, right? And so I think for what is most important is to build that foundation, which Newland has done, right? They've worked very hard to bring to bear their strong chemistry skills, to showcase they can do this custom synthesis of molecules for their customers, that they can take care of the IP in the process, that they can give very useful suggestions into the how best to manufacture, how best to improve yields. And that value add, especially to these biotech firms, is super useful. And as they've done that, now the opportunity set for them will continue to improve.
So, in terms of this entire opportunity in the pharma space, right? Even CDMO, the larger CDMO basket, whether it is Divi's Laboratories, whether it's Loris Labs, that whole pack has done so well. And now someone was saying that the next 10 years is huge for CDMO companies, but at some point valuations also come into the picture.
Yeah.
So, how, as a retail investor, how do you deal with that? Is there still a lot more potential in names like Divi's, because they have been huge wealth creators for investors in the past? But at what point do valuations start to become a bit of a headwind?
Yeah. So the valuations, see, the thing is, if a company is able to deliver strong growth over the long time, the valuations or impact of high valuation starts to become lower and lower, right? But it's a headwind, right? It's always a headwind. The question is, are you able to run fast, much faster than the headwind, so that despite the headwind, you can generate good enough returns, right? So the construct that one ought to use in such scenario is to say that if you think that today's valuation is elevated, right, which it may very well be in these cases, is to say that if I look at a future which is more normalized, which is more sane, right, and these valuations come down, right, over my holding period, is the company able to grow enough that despite that valuation compression, can I generate good enough returns?
But how would you know that? That is just assuming the company generates a certain amount of growth over the next, but that's still just hope, right?
Yeah. So I think so this is where sort of the bottom up work starts to come into play, right? So if you follow the companies well, if you listen to what they're doing, if you look at let's say number of products they've been working on, and again we're talking about CDMO business, but it's very true in other businesses as well, right? So again, that understand the drivers of growth or value creation in the business, and if you see that the potential for value creation or that growth over, let's say, the next 5 years is huge, that even if the multiple comes down by half,
Mm.
you can generate good return, right? And so,
Mm.
for example, let's take a case of Newland, right? Over the last 5 years, it's generated a profit growth of 79% compounded, right?
Wow.
So even if the valuation were to go half, you will still generate very good returns, right? So I think that's and also the longer the horizon, the impact, like if you have a valuation that halves in 1 year, that's actually really bad because what it means is that even if the company's earnings double, you're basically flat,
Oh,
right?
yeah.
So in the short term, it has a huge impact. But the same halving of multiple over 5 years has much lesser impact.
Mm.
Over 10 years has even lesser impact. But you're right in the sense that investors have to take the valuation into account. Your
Mm.
entry valuations do matter,
Correct.
right?
Yeah.
And so it's important to ensure that you're rational about when you're investing capital. In many cases, I think patience works. If you really like a company and if you feel that, oh, it's growing very well, just put a small amount of your capital in there,
Mm.
right? And keep watching. If you build further conviction, it's okay to put more money at it, even at a higher price, right?
Okay.
But it also gives you the opportunity that if there's a correction in the market or valuation of that sector or company, you can deploy more at
Mm.
more reasonable valuation.
So, what is your view on stocks like, say, a trend? I'm asking you because it's in the news right now.
Uh-huh.
When the market corrects,
Yeah.
great company, great business, fast growing, super management, Tata Group, all of that. But the stock is now down 30% from the top. There's, of course, competition and all of that, but there's also a market that is correcting. So,
Mhm.
if you are a holder in a good business and you've sort of bought closer to the top, as retail investors generally
Mhm.
do you still hold on and keep the faith?
So trend is something that we don't own.
Yeah.
In fact, one of my colleagues had been making the case that I probably should have listened to him. But it always was an evaluation that we just couldn't stomach, right? That we couldn't invest. But in general, if you have a company where you have a lot of conviction, um, and it falls down by 30%, it's fine. I mean, it will happen. No company goes up in a straight line, right? So you will always have those ups and downs. The key question is, do you have enough conviction in the company, in its management team? You can sort of further unpack that, right? Which is to say, is this correction because the company's underlying fundamentals have weakened, or is it just a market reaction?
Mm.
If it's just a market reaction, I think it's a good strategy to just stay put,
Okay.
right? Because soon the valuations will come and go, right? So usually if the operating performance is good, but the price takes a hit, patience is generally a good virtue. If the operating performance is hit, then it starts to get difficult because then you have to make a, a judgment on whether this is a short-term thing, in which case again it's probably fine. Like I said, no company, even for an operating performance, keeps going on a straight line, right? Once in a while you do get a hiccup. Sometimes these are actually good hiccups, right? Say some companies would make a choice to sacrifice short-term earnings for better long-term growth. Right? That's actually a great decision. It should be lauded. But sometimes price corrects. And so that's probably a good chance to not just hold, but maybe even add further.
Add on
Right?
to you.
But if you think that the impact is structural or more long term, then I think you may have to really question yourself and say, hey, should I still stay invested or exit? Right?
So, in Trent's case, since we're
Hmm.
discussing, and I know you don't own it, so maybe you don't track it that closely, but if you talk about 2 years ago, there was not much competition in this space. Now there's
Mhm.
so much, right? There's a re-entry of Shein, which is a huge Chinese brand. It did extremely well in this retail space. So would that be, a game changer for you?
And so again, I will qualify my answer by saying that we don't own it, we
Oh,
don't track
yeah,
it. But in general, yeah, you have to take that into account. Like
you
if the
have to.
competitive intensity is really increasing and has a potential to impact the company's business, you have to take that into account.
Okay, great. Now, you spoke about conviction and patience, right? I want to talk about some stocks that you own which have tested your patience a bit. And I think Hatson Agro is one of them. So it is, it has all the right ingredients. It's the largest private sector dairy company in a growing market. It has a great promoter, the founder of the business, but it's not done anything for investors. I was looking at the last 3 years. Since 2021, the stock has been in a range of 1,000 to 1,200. And there's a hardly a 10% compounded top line growth in the last 5 years. Now, for someone like you who is an investor in Hatson Agro, has this tested your patience? And what do you do at times like this?
Sure, no, that's a good example, and good that you picked something that hasn't done well recently, right? And recently is, I want to underline, because 3 years is also recent, right? Um, the reason I bring up is that there are two factors in this, right? One is in terms of its sort of long term growth, right? So the dairy business, it's incredible that for the last 50 years, if you look at the consumption growth in India, has remained at about 5% annual, year in, year out. It's about one of the most consistent things that I've ever seen over such a long period of time. Right?
5%.
5% volume growth,
Volume.
milk consumption,
Okay.
countrywide,
Okay.
right? And then obviously because protein takes protein to consume, the cost of that has been increasing. So if you look in value terms, there's inflation top of that, which has been about 4 to 5%. So the entire dairy industry has been growing to 9 to 10% for a very long period of time, right? And within that, Hatson is a very strong player, has been able to gain share, has been able to grow a little bit faster. The difference compared to many other companies is that for some of the companies we have discussed, they've done growth which is far more superior compared to Hatson. But they also have a risk or volatility, right? I mean, Safari did go from profit making to loss making during COVID. Like when you get that sort of disruption, Hatson doubled its earning in the pandemic year, right? So I think the key there is that this is a company that's not going to grow massively in any given single year, but we have the highest level of conviction that 5 years from now it'll be bigger, 10 years from now it'll be even bigger, 15 years from now it'll be even bigger, 20 years, 25 years, 30 years. There are very, very few companies in this country where you can have that kind of conviction.
But there's also an opportunity cost, right? I mean, if something is not performing for 3 years, at what point? See, because you invest for institutions, maybe it's still easier to hold for longer term. But for retail investors, at some point, they would think that, oh, I would get better returns elsewhere. So, at what point do stocks like Hatson Agro test your patience where you decide that, okay, you know what, now I cannot wait any longer?
So I think the question is, do you still have enough conviction in the company and in its business, which we clearly have in case of Hatson, right? So if you look over the last 10 years, and we've owned Hatson for the last 10 years, so I can talk about that, right? It is compounded at 20% annualized over the last decade, right? Despite all the disruptions that came along the way. That's a very reasonable, respectable level of return, right? But we as investors, having known the company and known the business for a long time, have a sense that there are points in time when it becomes a little too expensive, and there are many points in time when it's beaten down, right? And while we're very long-term holders, you do want to take advantage of that mispricing at either end of the spectrum. And if you did that, you can actually generate a return well north of the 20% IRR, which we've been able to do by just being disciplined around that, right? So this is a very different. So it's almost like in the cricket analogy, right? You can't have an entire team, of Rishabh Pants and Sehwag
Perform all
right?
the time.
You need to have a Dravid in there, which you know that is consistent day in, day out, which will be there, which will keep growing. And that's a conviction that we have on Hatson. And it will go through these phases, like in 3 years where, for example, it hasn't done much. But then again, you will have 1 or 2 years when suddenly the earnings will grow significantly because of the commodity prices, how they impact and so forth. So while the top line growth remains very consistent, bottom line does have volatility, and the stock market reacts to that. So you will have one of those years, and over your long holding periods, it will be able to generate good returns for
So there's one more angle to this, right? I wanted to discuss before we
you.
wrap up the conversation on Hatson. There's a lot of awareness now about what people consume. Maybe it's in just the top 5% of India's population, but people are becoming more aware about the negatives of dairy consumption. For example, I was reading that 80% Indians are lactose intolerant right now. And this awareness didn't exist about 20 years ago. Do you think that could be one of the reasons why the consumption has maybe slowed down? And is that so veganism is big now, not just in India, abroad as well. Would that be one factor to think of when investing in companies like this?
It's something you think about, but I think the bigger issue in India has been that people don't consume enough protein, right? And for a country where a large number of people are vegetarian, and even the people who are not are actually have vegetarian diet for most of the times. Dairy is a very important source of protein, right? And they ought to consume that. And there's also the notion that a large part of countries consuming dairy from either local players or smaller players who may not have high enough quality of milk. And as awareness comes in, people want to move towards better quality, better consistency, reliability of what they're consuming themselves, what they're giving to their kids. And so as that happens, the branded players will do well, right? And then milk obviously is a very important part of the story, but there's also tremendous growth that's coming in
The
sort of
other
curd
products.
or in ice creams, and they will continue to get bigger and bigger over a period of time. And so, as I said, I think this is a slow and steady part of your portfolio, right? It will keep growing. The company will keep growing. Its earnings over long term will also deliver, but they will have more volatility around it, and the stock price will probably have even more volatility compared to that.
So I noticed that a cornerstone of your investment strategy is generally surrounded around the integrity of the promoter, right? And in this case, Dr. Chandramogan has been, who's a founder promoter. He has uh, he's a veteran in this industry. Is that one of the reasons why you've had that higher amount of conviction as well?
So of course, I think in any of our companies, people make a huge difference, right? I think Hatson would not be Hatson without Mr. Chandra Morgan, but same way, Safari would not be Safari without Sudhir Jatia, right? So the people, and it's not we talk about the individual because they're at the helm, but it's what is not talked about enough is the talent that these people are able to attract around themselves, and I think that's the key, right? And having conviction in their capability, their drive, their motivation, their integrity, it's a very key part of your decision making of why you have the conviction, um, and and you know that, as I said, I think every company comes across a hiccup every now and then. Sometimes entire industries come across these hiccups, but the key, the high quality management teams will always come out of those disruption in a better place, right? And Hatson has done that multiple times. I think we've seen them, let's say, during the demon crisis, right, where most of the dairy companies got hit because they used to do cash dealings. Hatson had preemptively, before demon came in, had moved more than 98% of their farmers to bank transfer payment. Not that they predicted demon, but they knew that this was more efficient way of doing business, right?
Wow.
And is more fair to the farmers. So I think the really key, really good players understand where the pain point in the systems and how to solve them. And so if you think about Mr. Chandramohan, over the years, he's consistently done that. He's done that as a consumer side, that they were worried about not having consistent quality of milk. So how to provide that? He's how do you ensure that it gets distributed? It's available daily wherever you need it across the country. Even let's say in Tamil Nadu, you had Arvind, which was serving Chennai, but as you go into other districts, there wasn't good enough availability, right? So how do you sort of solve that problem for your consumers? He did that. But then in some ways, India is very unique in its dairy industry, where rather than having big dairy farms, you actually source milk from thousands of, hundreds of thousands of customers or farmers in case of Hatson. And they understood their pain point and solved them by treating them fairly, by having a quality evaluation of their milk, transparently telling them what they're owed, depositing that into their bank account, so they don't have to come and beg the collection guy to get their money, right? So they, and as a result, more and more farmers come to them, which reduces their cost of procurement, and they're able to pass that on to customers. So more customers come to them, and that cycle sort of continues.
Wow, this is like a masterclass for me in dairy in dairy manufacturing. But since we're talking about stocks that are great businesses but have not performed in your portfolio, another stock I wanted to discuss was Aptus Home Finance. Very strong operating performance, but done nothing for the last 5 years. In fact, in a raging bull market, the stock has, I think, languished between 250 and 350 for the last 5 years. When you have one of the most profitable finance companies in India in your portfolio, but the stock is not doing anything, what do you do at such a time?
Sure. So just one small thing. I think that Aptus went public in 2021. So
Yeah.
it's last 3+
3 years. Yeah.
which is also a long enough time that it hasn't done well in the public markets. But as you pointed out, their operating performance has been superb through this period, right? So since going public, they've doubled their profits more than 2.5 times, which is quite impressive in a period of 3+ years. Um, but the price hasn't moved much, which basically means that their multiples have really compressed, right? And so they are trading at probably one of the lowest multiples that they've ever traded at, right? And it can happen to companies.
But why do you think that happens?
It happens because things go out of favor, right? It happens because people think that there's something wrong. I think in the case of financials today, I think you went through this sort of rising interest rate phenomena in India as well as globally, which so reduced liquidity. Non-banking financials have that concern around liquidity and how they can get. So the entire sector sort of got downgraded as a result of that. And when you have that sort of headwind, the fact that that Aptus was able to manage this far better than others gets overlooked, right? But that's just the nature of the beast, right? That's how it happens. But since you mentioned 5 years, right? So as it turns out, we invested in Hudson early 2019, so it's about 6 years now that it was private at that point in time.
In hat
In sorry, in
in
Aptus,
Aptus,
in Aptus,
Aptus,
sorry,
yeah.
yeah. So in Aptus, we invested while it was private,
Unlisted. Okay.
unlisted. In some ways, its returns were very front loaded, right? So from the time we invested in private to the IPO, I think it went up more than 4x in less than or just over 2 years.
Wow.
And then since then, as you said, it hasn't done much. But if you look over the 6 years, it is still, it's up almost 4.5, 5x. It's a pretty good outcome.
It is. I didn't know you invest in
Yeah.
unlisted. Then that changes the
Yeah,
game
that changes a
entirely.
little. But but the thing is, it can happen in a listed company as well. That you have sometimes your returns are front loaded, and then the stock may not do much. Sometimes the other way, that it doesn't do much for some years in the beginning, and then the returns are sort of back ended. So the key is that do you have enough conviction in the operating performance of the company? And here, that's a resounding yes, right? They continue to grow more than 20% year on year. They have ample equity, so they probably don't need to borrow for next 5 years, maybe forever, right? Because they are, even with slightly over 1x leverage, they're already clocking 18.5% ROE. In a year's time or so, they'll cross 20%, right? Even with a very reasonable leverage of 2x or 3x, they will be at 25% plus ROE. There are very few financials in this country that have the potential to be able to deliver that. And so through these periods, you just have to be patient, right? And what happens is that this is like, how you compress a spring. That's what is happening. The earnings are growing, price is not moving, so their valuation is basically getting compressed. And in many cases, it's just sort of like a loaded spring. It can just rebound very quickly, right?
Wow.
You don't know when it happens. And we talked about examples of Newland and Sapari and how well they've done, but they went through periods like this, right, where their prices just weren't going, where earnings continued to compound. And again, you had the same thing of that compressing of the spring that eventually sort of got unloaded, right? So Not that I'm predicting the same thing to happen for Aptus, but the ingredients are there, right? If your operating performance is good, the price sooner or later sort of responds to that.
So this is when a stock doesn't perform despite your expectations that it will. But
Mm.
what happens when a stock sees a drawdown of 20-30% in an excellent company? At that point, how do you manage your fear? How do you, because there's so much people's money involved, right? Not just
Yeah,
your own. At that point, how do you manage fear?
yeah. So it's it's interesting. It's if the operating performance of the company is good, I think you need to stay the course. You need to have the conviction. If anything, those are the times when you may want to add more, right, to these ideas. Again, it's very tough, right? I think Mark Mobius had once said, right, that the best time to invest is when there's blood on the street. But it's gut wrenching because some of that blood is yours. So it's not easy. By no means it's easy. Uh, but if you have the conviction in the company and what it's doing, that's precisely what you need to do.
Interesting. Okay, so let's move to a stock which has done exceptionally for you, right, in your portfolio, Affle. It's what been a five bagger. I don't know the
There's more than
exact
10. Yeah.
more than 10 bagger in your
Yeah.
portfolio. Great business, growing company, all of that. Um, what is the potential in such a space? I'm asking because this entire space, this technology space is changing by the day. So for players like Affle, is there still a long sort of headroom for growth?
So Apple, for those who don't know, is plays in the mobile
Mobile,
advertising
yes.
space, and it's sort of the largest third party advertising platform in India. There are obviously the walled gardens of Google and Facebook that do more business, but if you want an independent player who can bring you advertising sort of opportunities across a bunch of different platforms, then Apple is your go-to place.
Yes.
Uh, if you think about that business, I think internet and sort of people's attention on their devices continues to increase. Right? It's not going down, and advertising will sort of follow where people's attention is, and as more and more sort of goes online, either it's mobile or through other devices, that's where money will follow. In many ways, India is still lagging far behind where it should be, right? I think consumption is already, or the online media consumption has already moved online very much, which is what we're doing today is a
Yes.
testament to that, right? And so the advertising dollar will have to follow that, right? So I think that's precisely what's been happening, and Apple has been a big beneficiary of that. I think their key um, offering to their customers had been that they are the best at identifying who the right users for a particular service is, right? So let me give you an example, right? So if you're a Zomato, right, then you want to acquire a million or 10 million customers in India. And I'm picking Zomato, but the same thing would be true for Amazon, or it could be true for any other app. You would go and spend some money on Google and Facebook, um, uh, which is very effective, but is also very expensive, right? And not everyone can afford that. If you want to still acquire more users, you go to somebody like Apple and say, I want to acquire X number of users, but my budget is X, right? I don't want to spend more than this amount. But the beauty of what Apple is able to do is they don't just say that, oh, come and spend 1 crore and you will get the number of users that you get. They will tell you that for your profile, we can get you users at, pick a number like 80 rupees a user, right? And let's see how much it scales up, right? The great point about that is that you never end up wasting money, right? If it really scales up, you get the users, you get it at the cost. But if they find that they're not able to get the users, they will stop. So you don't end up wasting or overspending the money on something. And they're just extremely good at that because they do those two things into identifying who the right users. So let's say, coming back to this example of Zomato, they will know who are the people who transacted online, who are the more propensity to look at a food related app, right? Because they have hundreds of billions of data points that they have had over the years. And they have algorithms that can sort of plow through that and identify the small subset of users who would be a good offering, right? Because otherwise, if Zomato were to show an ad to 700 million internet users in India, it's a huge waste of money,
Yeah, it is. It
right?
is targeted marketing, so
Targeted.
to
So
speak.
that part they do very well. And the second part that they also able to do is to say that once you identify a user, they'll say, what is the most cost effective way of getting to them, right? So yeah, you can go on Google, it will be very expensive, but you may be going on an obscure app that does meditation, which is very cheap, and that's the best place to get. So I think Apple has done that extremely well, and that's why they've done so well for themselves. And we think that this trend will continue, right? And
So I know of Affle closely because they recently acquired a company a couple of years ago called App Next,
Mhm.
and my brother works for that
Oh,
company.
okay.
Yeah,
Yeah.
so it's Israeli based,
Yeah.
and it's doing phenomenally well. So I know he works with Anuj directly, so I
Uh-huh.
know how the company is doing, and it's had phenomenal growth. But my question to you is for a retail investor who has maybe missed out on a big chunk of the money making opportunity in Affle. Is it too late, or do you think that there is still a lot more scope given that mobile penetration is hardly anything yet in a large country like India?
Yeah, so if you have a long enough horizon, again, I'm not making a
Yeah,
recommendation
sure.
for Apple, but in general, for companies like these where there's a long runway to grow, you can always invest. If you don't like the valuation, as I said, put a small amount of money, and then when you get the right opportunity, right? So even in case of Apple, like just like you were saying for say Aptus or Hudson, till about a year ago, I think their price was languishing for two and a
Yes,
half years,
yes.
right? It just can happen, right? Because they
That meteoric rise started, I think, just 2 years ago.
no, so they had a huge run, let's say, sort of post pandemic for the next, few years. And then you saw, period where the price was
It
just
was
there,
slow.
right? And so every company will give you that opportunity, right? You just have to be patient enough. And when you're going through that bad phase, to have the conviction to deploy more capital.
Okay. So before we wrap up, just a couple of more questions on a few sectors, and then we'll try and understand your investment philosophy, in the sense, your behavioral philosophy when you look at investments, right? And then we'll wrap up. One sector that is severely underpenetrated even now in India is insurance. There's a lot of mis-selling that happens in the insurance space, and especially in rural India, semi-urban India, there's still a lot more scope. You That is a space that you like. Do you think there's a big runway for the insurance sector over the next 5 to 10 years?
Yeah, I think we clearly think that, right? So I think the insurance market has been underpenetrated in India. I mean, the numbers sort of clearly show that. So if you compare India to any other developed nation or even many developing countries, you find that the penetration levels are low, or in many cases, even when the penetration is there, it's people are underinsured, right? Part of it, you could say that for some decades past, Indian economy wasn't doing as well. People just didn't have enough income or wealth that the need to protect is there. I think people were really focused on providing for their families, and protecting sort of comes later. But it's obviously changing now, right? People are earning more, they have more wealth, there are more things to protect, and so the need for insurance
Goes up.
continues to increase. And the industry, it's a big industry, and it's been growing quite well. And just like I was saying for the dairy business, it's an industry that 10 years from now will be much bigger. Another 10 years from now will be even bigger. And so as you have that sort of tailwind behind this, it would not be that next year you'll find the industry to double. It would not happen, but it will keep growing consistently. And so if you find good players playing in that space, it's a good industry to bet on.
Okay. So you know what? Since you have like this cult following in the market, there's so many young investors who follow you. We put out a question tab on one of our social media profiles, and we got many questions from many investors. So I thought, let me just do a quick.
Wow,
Yeah.
this is going to be a shootout.
Yeah, yeah. You can answer what you want, and you can ignore what you want. So one question that has come in is from Satish Singh, who says his disciplined approach and focus on long-term growth is truly inspiring. How does that happen? You want to, tell us a little bit about that?
Yeah, so I think, I mean, in my case, I think given the background that I came from, where there's sort of more focus on fundamental understanding of business, and that as a key driver for value or market price, growth, just sort of lends itself to that type of investing, right? So you look for companies where there's potential to grow, and there's ability to create that growth by the management team. It's no guarantee that it will happen, but you try to put yourself in places where odds are in your favor, right? So if you find those things, you be in there, and then you keep monitoring. It's not a binary decision that you invested and then it's done, right? So you have to keep monitoring these companies, ensure that the companies deliver, they do what they say. If there's a difference, is there a rational reason behind that? Is the performance better than what you had expected, what the company had communicated? And if that keeps happening, then you build your conviction to sort of keep adding further to it. So it sort of comes naturally. So I don't know of any other way. So that's why we follow this.
It's just okay, great. Some things you're born with, right?
Yeah, or you learn through your experiences.
Okay, selling strategy. Simple Investing has asked you, what do you think? When do you need to sell a business, or when do you switch from one stock to another? What's your selling strategy?
Wow, that's a tough. This is the one question that I can tell you that most seasoned investors also struggle with. It's not an easy decision to sell. Um, well, some part can be very easy. As I said, if the company is not doing well, or the easiest one in our case, if we see a corporate governance type of issue where we don't have a comfort with it, that's a pretty easy reason to sell. Or if you think there's a structural change that has happened to a company or its business, and it's be prolonged as sort of impact, again, that should be a relatively easy reason to sell. But in most cases, situations are not that simple, right? The toughest one I can tell you is the one where a company is done exceedingly well, but the stock has done even better, right? And as a result, it's trading at what you think is very high valuation. And you say, you know what, this is too expensive, I'm going to exit.
One would think otherwise, right? One would think that the toughest decision would be when the stock is falling, whether you sell or not. But here it is the
It's
it
the other
is
way,
the
right?
opposite.
And if you sell, you run this risk that the stock can grow up manyfold from there again. Um, but when you're at a high valuation, you do have that risk. You have the tailwind, the headwind in front of you. So you need to have enough conviction that the company can overpower that headwind, right? And so that starts to become a little bit of a difficult decision. But conversely, I said, if the company is performing well in terms of its revenues, in terms of earnings, in terms of competitive positioning, and the stock falls, that's actually very easy. You shouldn't be selling.
Okay. There's one viewer who asks, can you ask him about his failed investments and the reason for the investment thesis failing? Any example that you want to give us?
Yeah. So reasons the investment fail.
Well, you can give us
Is
the
Yeah,
stock, and then maybe
sure,
why
sure.
it failed.
So in general, I think the reasons why companies fail or the investment fail is either you paid too much for it, and the operating performance sort of wasn't, couldn't justify investing at that high level, or it could be that you overestimated the company's ability or competitive position, and it sort of hasn't sort of played out in accordance with that. And so sometimes it can be that even a good company, if you invest at the wrong time at a too high valuation, you don't generate good returns, right? So we had this example with a company called as Car Trade, right, where we
Car trade.
invested when just before they went public.
It was
right?
very promising.
It was very promising. It had a lot of potential. But the pandemic was a tough period. You had this scenario where even when the demand picked up, the supply of automobiles couldn't keep up because of the semiconductor shortage, right? And so in that environment, when there is more demand, less supply, the dealers have no incentive to pay for somebody like Car Trade, and so the business took a much bigger hit, and our entry valuation themselves were pretty high, and so as a result, even though the business has recovered very well from there, in that 3+ years, it hasn't generated good returns. So your entry points do matter. The story could have been very different had we, let's say, waited for the better valuation and invested when it was beaten down, right? So sometimes it's your actions that can define whether it was a good investment or not,
So
right?
timing of the entry.
So entry valuations do matter.
Okay. Vidya says, just give me the list of those future multi-baggers.
Well, I can't
Getting straight to
do
the
that, but
point.
what I can tell you is sort of the places where you invested in recently. Again, no guarantee that there'll be multi-baggers, but at least we're putting our money where we're putting our mouth where the money is, right? So this is one of the recent investment we did was in a company called IKS. We just went public recently, so we made a sizable investment in that. Over the last couple of years, Orion Pro was a company that we invested quite substantially. Again, not recommendation for investments, but this is where we're putting in money. And for those who are brave hearts looking at sort of smaller or younger companies, we invested in a company called as Vasa Denticity, which has a brand called as Dental Card.
Okay.
And it's sort of consolidating the distribution for dental products or for dentists across the country.
What is it called again?
The company's name is Vasa Denticity.
Okay.
And the brand or the platform is called as Dental Card.
So IKS, Orion Pro, and Vasa. These are your investments, but of
These
course,
are
standard
the investment,
disclaimer.
and I'm talking about last couple of years where we deployed enough capital.
You all have high conviction there. Okay. Now, one on the markets, right? Because everybody's worried about what's happening in the market right now. So Sandeep asks us, how long will the market remain range bound, and will better corporate results help the FI flows to come back?
So the market, I don't have a very strong point of view. I mean, you could say that you have 2 strong years. The chances of a subdued market after that are higher than usual. But this is not a deterministic world. This is not how it plays out, right? There's so many other factors that have a play. What I do have a strong conviction on is that if you pick the right companies that are able to grow their business, that are able to grow their earnings, in 5 years from now, they will be at a higher level, right? And that's what we are investing behind. In terms of FI flows, it's kind of interesting that despite all the positivity surrounding India, since end of 21, for the last 3+ years, the net inflow into Indian public markets has been pretty much zero. I don't know the latest number, but it's not been much at all, right? And which is kind of surprising, right? Because people's interest in India and acceptability of India as an investment destination has actually increased quite considerably. But it is not backed by FI flows. And part of the reason is the rise in interest rates, right? So the US interest rates, which were pretty much near zero, rose quite considerably. The interest rates may have cooled off from there, but actually bond yields have gone up, right? So in that environment, generally you don't see flows coming into emerging economies, and India is one of those. So until you see a drop in those bond yields, I don't see substantial flows coming into India. But at some stage it will happen.
Okay, one final question before we end. Once again from Simple Investing says he has very good picks. Please ask him his buying thought process, TAM, size of opportunity, management, and weightage he gives to valuation vis-a-vis growth and quality of a company. I think you answered it along the way.
Yeah,
no, just want to summarize it.
I'm really impressed with the quality of questions. I mean, this is really getting to the meat of it, right? Which is how do you weigh different things, right? Everybody has the same information. How do you reach different conclusions, right? It's because how much weightage you give to different factors.
Correct.
What I'll tell you that in the very long run, what matters most is the quality of the business, its underlying economics, its ability to grow. They far outweigh everything else. But in the short term, valuation is probably very important. So if you're a long-term investor, really focus on the quality. If you get that right, even if the valuation is a headwind, you probably do okay, right? or even if you get the valuation wrong by a little bit, I think you'll be fine. But if you get the quality wrong, then over the long term, it never plays out.
Okay, this was really an amazing discussion. I learned so much through this entire conversation. So, thank you so much. If you had to leave us with one piece of advice that you want to give the new investor who wants to build his portfolio like yours, what would your advice be? The young
I,
investor.
yeah. So my advice would be one: if you have the time and inclination, uh, just get to know the companies that you invest in. Right. I find it amazing that people would spend so much time researching which phone they ought to buy, the different features, and what is better and what is not. But for buying stocks, they would just hear a tip from somebody and say, I want to buy this, right? So just do that diligence. Just get to know the company. Just try to understand what they do. I mean, today, all the retail investors have access to the transcripts, the con call transcripts, the investor presentations. In many ways, I think the SEBI has done a very good job in creating that platform for investors. So, make use of that, read, learn, and then as much as possible, try to learn from both the mistakes and good outcomes of other investors. The more you read, the more you learn. And so those are you asked for one, I'm giving you two.
Yeah, thank you. Thank you, Sumeet. It was really a pleasure speaking to you. Thank you so much for being on the Money Mindset and all the best with your journey.
Thank you.